because I think it's a generic audience. Again, if you have questions, points, anything that you want to discuss further, happy to discuss further. We have Carla and Valentina and the team have a session for meeting and talking. We can talk afterwards as well. Okay? Great. So again, before I go in, let's do this. Who knows what's Bitcoin? Ah, great. Super knowledgeable. How many of you think Bitcoin is actually decentralized? Raise your hand if you think it's decentralized. I'm not raising my hand, by the way. You raise your hand if you think it's decentralized. Now, there's at least 2 people who think it's decentralized. Okay, so number 1, you can always ask me back, decentralization, what does that even mean, right? Because it can be organizationally, technologically, or commercially. But overall answer, it's not decentralized. Technology-wise, it's more or less. Organizationally, it's not at all. Commercially, not at all. Like if you take 2 out of 3, it's not decentralized. How many of you think Ethereum? How many of you know Ethereum? Okay, similar, right? How many of you think Ethereum is decentralized? Well, not one. The other 2 guys, you're not raising your hands, okay? So Ethereum is very similar to Bitcoin with one difference. There is an actual organization, hence centralization, right? That actually is developing the platform, and there is an alliance. Why I am starting with this? Because there is a lot of misconception about blockchain. And I'm hoping that I will bust some of the myths that any or most of the events you're going to look and see that people say decentralization is great, It's not true. And one last point before I finally go to my presentation is that, guys, blockchain is a technology. It is not an end in itself. Anyone who pitches you a product or business and says, because it's on blockchain, you just go away from that person. That's my advice. Just leave that person to think that this is so great in itself. Because again, this is something that you see a lot among blockchain people. They think it's so great, it's revolutionizing. It does, but not for its own sake. It's a tech. It's a thinking, it's a technology. It's not an end in itself. Okay? So that's sort of disclaimers and bad points. Now let's go into interesting stuff. So just very quickly about me. So I am part of this. Maybe I can show. Okay, Prism. Prism is the top blockchain economics and governance company in the world by now. It's very young. It's like 9 months old. We already are top because we advise in how economics and governance on blockchain has to happen. And we deal with all the big guys, the Ethereums, the EOSs, the IOTAs, etc. I'm part of SOSV. It's the biggest VC accelerator in the world. We have 6 accelerators. We invest in 150 to 200 companies every year, globally. And as myself, I've been like part entrepreneur, so I failed twice. I exited once. And have been advising in AI and blockchain, in AI in 7 years, blockchain 1.5 years, roughly. That's just me. And here's the agenda. Okay, so trying to make a bit of a flow. Again, I'm trying to bring all the one-on-one points. If there's anything you don't see here, you can ask or come talk to me afterwards. So we'll go into what's basics of blockchain, when not to use blockchain, when to use blockchain. I think this is very interesting because a lot of the cases people just think, again, let's just put this on blockchain. Does it make sense? Sometimes yes, sometimes it does not. Sample industry, I took one. I think it's very sort of a big industry, e-commerce. I didn't want to have 10 industries. I just picked one I think could be quite relevant. And the way I made it is very universal. So whatever the industries that you have, probably this will apply. And if not, you can raise your hand and ask about your industry. Top myths about blockchain, I think this is very important. Like you have to buzz those myths, yeah, because there's a lot of that. Trends and vision, a bit like what's the direction all of this is going. I put top 10 blockchain firms in 2018. This is also very interesting for you just to see who is at vanguard, who is really doing well in some ways. Well, I added a Brazilian flag here, so I called it blockchain in Brazil. How many of you are Brazilian? So all of, okay, well 70% of the audience is from Brazil, great. No, that's great, that's actually very cool. Tips for future-proofing, to future-proof your, who knows what means future-proof? So I had Philip who just told me maybe they don't know. Okay, who knows what's future-proof? That's one. Same guy who thinks Bitcoin is decentralized. 2, just kidding, just kidding. Future-proof means simply to make sure that your business is going to succeed in future. I cannot predict future, But as much as we can right now, look beyond sort of what we have and sort of prepare ourselves technologically and commercially to that, right? Okay, so again, interrupt me if there is something that's not clear. How many of you understand what that is? Let's see. Generally, what is this whole thing? Okay, it's a chain. It's a chain of steps, that's right. It's a process. So let me walk through this. I thought maybe just walking through is easier. So I think it's easier to explain what blockchain is by example, but before I do it, maybe let me just define it. Blockchain is, if you like, decentralized ledger. How many of you know what's a ledger? Ledger is this list of transactions, dates, etc. It's a list. Now put ledger into different computers and connect all those different ledgers. That's called blockchain in very simple ways, right? So why we put this transaction, to simply explain, is basically what happens if you want to do a transaction on blockchain. This is the schematic for that. What does this mean? A wants to send money to B. How does that work? A wants to send money to B, right? Transaction is represented online as a block. Again, a simplistic sort of schematic, right? So there is that chain, right? Each transaction is a block. Think of it as some sort of a data object or data block or whatever. You can call it whatever you like. The block is broadcast to every party in the network. So the block says this transaction is desired or willed to go through. Then wherever it is posted, the node, the place where it is posted, it's going to broadcast to everyone saying there's this transaction coming up. What happens? Those in the network approve the transaction as valid. They check the validity of the transaction, the poster, and they approve it. The block then can be added to the chain, which provides the indelible transparent rule of transaction, right? So initially there is some sort of a block that's broadcast. Everyone says, great. That's becoming history. It's part of blockchain. You cannot change it afterwards. And the money moves. Once that's there, the money moves from A to B. Maybe, I don't know, now that I said it aloud, it sounds a bit complex, but yeah? The block is set of transactional data, but for sake of simplicity here, you just say one transaction is in one block. Block is basically something that contains information about your transaction. It's an informational package. It's something, it's like file. Think of it as a file. When you're sending, there's information in it. It's like a file. Sure. A and B should be in the network, that's right. Yeah? Okay, so simplify. I didn't spell it out loud when I was putting, but maybe it sounds more complex. Just put it this way. I want to send money to someone. I express my willingness. There is some data about it. That data gets broadcast, checked. Everyone says, great. This guy can send to this other guy, whatever, money. That sits on the chain and the transaction happens. That's roughly what it is. The good thing about blockchain is that it's not deletable, or you cannot alter that data. Yeah, once it's there, it's there. Yeah? Okay, approved means consensus. You can ask what's consensus. Approved means majority, let's simplify. Majority of the different participants of the chain say that this is good, or this is true. That's what means approved. No, they don't have any relation. They are just there to approve or disapprove. They have no idea who is even the sender. They are basically people. They are basically there to approve, disapprove, and earn something out of it. That's how they earn Bitcoin. Right? Yeah? It's going to be more technical. No, let's, for sake of this discussion, it's actually data. But I think what they probably meant is there is, let's say, different types of keys who are pointing to that data that you cannot necessarily deal with. Well, you can do a lot of things with that. And frankly, it's, in a sense, even some of the blockchain projects that are there, like Tezos, Definity, etc., you can reverse even the chain itself. But that's a different story, not relevant here. But overall, just think of it this way. It's a transaction. It says Carla sent to Philip this amount of money on this day at this time. That is the data. That stays there. You cannot ideally delete it or do anything with it or change it. Yeah? Questions? Yeah? Yeah. No, when you're saying sending money, you mean the wire transfer. When you're using Western Union, do you think you're sending money? Or you think you're sending money when you're doing a bank transfer? You're not. It's exactly the same thing. That's right. That's right. It's exactly like, okay, 10% of all the money in the world is actual cash. 90% of the money is not there. It's a transaction. It's exactly the same for Bitcoin, except it's not 10%. It's the whole thing. Yeah? Huh? If it doesn't, if it's not approved, no. Oh. Okay, let's do this. Who wants, I think you have, do you know what happens if it's not approved? You don't know. Anyone who knows what happens if the transaction is not approved? No, the why is a whole different, we can have another session about this. What? What happens if it's not approved? So number of transactions, fraudulent transactions. Your question is hinging on the fact that actually blockchain started because they wanted to tackle two things, double spending. Bitcoin's original paper was trying to tackle double spending because digital signature, you can double spend. So they came up with the idea, let's do something that does not allow double spending, so adding timestamps, etc. And also let's make it in a way that denial of service attack or some sort of a computer attack could not break the system. These are the two main things that sort of Bitcoin tried to address. Now, when you're saying something is not approved, that usually is rare and it's like it's possible. There are a number of cases that this happened before. But if something is not approved, transaction doesn't happen. That's as simple as that. Why it's not approved? Sometimes majority of that, there could be a possibility where a bunch of computers gang up and do not want consensus to happen in a specific way. They can do it, theoretically at least. Specific big transactions, you want to reverse, right? Or you want to have your own fake transaction and approve it too. This is all possible. But depending on the chain you use, it can be very, very computationally very difficult to do. But to your question about what happens if it's not approved, it's not approved. You're trying to send a bank transfer, it's not approved. What happens? It's exactly the same. Yeah? Do you mean on the chain? So there is number of chains that all have this kind of models. All of them have something where you can be invited, participate, there's conditions, there is consensus mechanism. Each of them have their own. Every one of them has their own, actually. There is some that use the basic fundamentals like proof of work. How many of you know what's a proof of work? 3, 4, yeah? Sure. No, the transaction sits on the chain and becomes part of the chain once it's approved. There are a lot of transactions being broadcast. Some of them are not received, some of them are not approved. Only once a transaction is approved by consensus, that's the one that sits on the blockchain. So the block, I mean, I'm using the word, yeah, you're right. There is part where I'm saying block as in the block that's still being broadcast and block that sits. Think of it this way. It's initially when you're doing a transaction, it goes into something that's being broadcast. Only once and when it's approved, that becomes, I'm using block for both cases. That's why I think you're confused, but yeah? Usually it's 2/3, it's the simple majority. Depending on special cases, you can have also big majority. Yeah, but usually it's 2/3. For a case of, let's say, Bitcoin, they always say 51%, just like barely a majority. So guys, think of it this way. I'm trying to, like, it's like this, right? It's an audience. I'm trying to send something to someone over there. I'm saying, I want to send money. All of you or chunk of you have to agree that I have to send something there. It's literally that. Just visualize that. If a bunch of you say no, I can't. A bunch of you say yes, I can. Or if you want to fake me sending something to him, you can also gang up together, which is difficult in case of Bitcoin, and you can send something if you are majority. Again, I'm saying this very simply, like disclaimer, simplifying. There are a number of chains that have different governance or consensus mechanism, right? Proof of work and proof of stake are the two most common ones. Who knows what's proof of work? Like, I'm not going to ask to explain, but just roughly what it is. Okay, maybe you want to explain? Or anyone who wants to explain, you're welcome. Everyone knows what's proof of stake? Proof of stake. Stake as in not the meat, the steak. Huh? Proof of work? Yeah, go ahead. That's right. Okay, who knows what computational problem that is that you're trying to solve? Let's make it interesting. What do you think? Do you know what it is? Do you know what computational problem is that you're trying to solve usually? It's a hash function. Everyone knows what's a hash function? Let's do a mathematics lecture. Hash function. Great, some people know. Think of it as a one-way calculation. You give it a lot of data, it gives you a big number like this. That's a hash function. Bitcoin mining is amounting to calculating a hash function. That's what it is. That's the computational thing. Let me move on. I think here you're going to have a lot of questions, and I'm happy to take those. So I'll spare you this. Maybe I'll just say what ICO is. Everyone knows what's an ICO? Who said yeah? Okay, raise your hand. Great. 60% knows what's an ICO. We're not going to talk about it. Not now, at least. So I put together the 4 main points that I think are relevant, very common, and when you should not go to blockchain. You cannot, you shouldn't. Any serious investor is going to look at you, smile at you, and never get back to you on an email if you decide to pitch them this. So, number 1. Anyone who has good examples, you are welcome to tell me if you know some good examples for each of the points. I'll start with the first one. I was in an event. There was one project. Okay, I don't know in Brazil. Do you have electric cars in Brazil? Okay, you have some. Okay. In Singapore, there is also very few. It's not mainstream at all. So this project had an electric car charger. They want to do an ICO, and they want to put blockchain for their project. So I asked, I said, why do you need blockchain? The guy looked at me and said, well, you have a mobile application. You go to the electric charger, you charge your credit, and then you charge your car. I said, so why do I need blockchain? He said, it's blockchain. We fundraise, it's great technology. I said, but do you really need blockchain? She said, no, we fundraise and it's good to be on blockchain. Okay, but that's not really helpful. So that's a really bad example. And this guy spent a lot of money to be in this event. What's a good example? I'll give the good examples in the next slide. So number 2. Anyone has any examples, like bad project examples, just by chance if you have? You know, they're like 95% of all projects on blockchain are bad examples. Like they should be fitting, they should be fitting there, yeah. Yeah. Yeah, that's right. Anyone has an idea how many transactions per second? Huh? Well, who said 7? 7. No. What 250? 250 Bitcoin would go and celebrate. 250 is, I don't know, it's not Bitcoin. No, not even Ethereum. Do you know how much is the transaction per second ratio of Visa, for example? Because I'm saying Visa because they want to be like Visa. Ethereum wants to be like Visa too. Do you know? Have any guess? Huh? No. More. Huh? No. 20 to 40,000 transactions per second. So Bitcoin and Ethereum, which is, let's say, 15 transactions per second, they want to be like Visa. So they want to add 3 zeros after them. So they are not there yet. So scalability is very, like you touched a very good point. If you have you have, let's say, e-commerce project. Like I'm going to show e-commerce, right? E-commerce project, many transactions on your platform. And there are a number of projects who are relying on blockchain for that. Very slow, lot of problems. Because every product or project where you have many transactions you have to do, you cannot rely on existing platforms, not on Ethereum at least, not now. There is few others that you can, but Ethereum is not that platform. So when you need scalability, you're looking at chains, you have to see what's the transactions per second, how scalable, reliable it is, can you do it on blockchain? Thinking that you are a marketplace or have more than one type of user automatically qualifies you on blockchain. You know how common this argument is? They say, I'm a marketplace for, I don't know, second-hand luxury goods. So I should be on blockchain because there's two sides of users. Blockchain, many sides of users, right? So if it's it's like a marketplace, it should be on blockchain. We get this a lot. And usually it doesn't make sense because in many cases, it's not scalable. Marketplace implies many transactions. If you use blockchain, you cannot have many transactions if you use Ethereum. It's just not scalable. Or you can go with some specialized chains like Hyperledger or EOS or whatever. There it's better. But just because it's marketplace, it doesn't qualify you for blockchain. So I hear this a lot. Some of them are very frank, yeah? Okay, for Brazilians in the room, SGX is Singapore Stock Exchange, is the stock exchange of Singapore. SGX is, I can tell you, already considering trading Bitcoin and Ethereum. If you ask me if they put their platform on exchange, on blockchain, that's a no for the moment. But there was an experiment in Australia. One of their stock exchanges did this, so they put the whole exchange on blockchain. That had a moderate success, but again, we can discuss after whoever wants to know. Yeah? What drives what? The slowness. Okay. Good example, let's take Bitcoin. When you have, the more nodes you have in a system, the more approvers. All the approvers, like to get to a simple majority, you have to have more. And the bigger it grows, the more have to participate. One of the main reasons is because it's Bitcoin paper, if you read, I don't know, how many of you have read it? Have you read it? Bitcoin paper by Satoshi. So if you read it, and if you can read between lines, you'll see it was not, he didn't think it's going to be big, right? So it wasn't designed to be very scalable. It's a great visionary idea, but he didn't think, and the details are a bit like, and this is like some opinions, scholar opinions about that, right? So the bigger the network, the more consensus forming time takes, and that's why it's slow. It's mostly because it just takes more time to agree on something. I'm going to discard that. All of that plays a role, but it's more just the number of different nodes or approvers who have to actually approve. Because if you have 10 and you have million, it's very different scale. Yeah. So there are different, so there is an article, and I'm not going to say this because you'll probably start Googling it. There is companies like Hashgraph, you can check afterwards, that basically say the future of blockchain is not blockchain. No more blocks of transactions. They have a cyclic direct graph. It's a completely different architecture, and they have 100,000 transactions per second already. So there's different projects who try completely different stuff. And they say, we're not blockchain. I mean, they are blockchain, but they say we're not blockchain. We're not blockchain. Yeah, sorry, you had a question? Yeah? That's right. The first time that was last year that ICO investment exceeded VC investment. That's right. How what? How big is the bubble? You want there is a number. I don't have it in my head, frankly. But there is okay, to compare, if you compare this to a dot-com bubble, as an example, it's 2 zeros less in this case. Dot-com bubble was a lot bigger, which is strange. Yeah, but wait, the bubble has little, I mean, there's different things you're talking about, right? There is a bubble in terms of investments, and there is obviously some correlation with the Bitcoin price. But my point is the bubble in terms of investments in projects was big, but it's not the biggest at all. It's just one of the big technological bubbles. .com was much bigger, like much bigger. In terms of Bitcoin pricing, yeah, it fluctuates. It's a market correction that's happening now. And plus, there is a lot of alternative coins that are coming up with better technology and stuff. Yeah? Okay, who agrees with her? What, am I the only person who agrees, really? Yeah, did everyone understand the point? Maybe I can give you a microphone. Can you repeat? But briefly.
ICO is really a startup at a really, really early stage. They only have a concept. They don't even have a business yet. So like all startups, you know, venture capital, private equity, like maybe one in 10 can succeed. At least 90% or more fail. So those numbers that they failed within the first year or 2 years or 5 years are still very much in line with a startup. Whereas people think ICO is more like an IPO, which is already a going concern making money.
Okay, so I agree with the overall, let's say, spirit. ICOs, there are two types of ICOs, guys, and you're right. Most of the ICOs that you hear of are the people, just people, who have an idea. And then they come say, I need something called white paper. And I'm sure most of you know what's a white paper. White paper, Brazilian audience, you guys know what's a white paper, right? Not the scientific white paper, the blockchain white paper. It's a ripoff from scientific journals. Anyway, there are two types of ICOs. There are people who want to do something. It's a proper startup, like you say. And there are companies, existing companies, that are doing an ICO for their existing or new business. I'll give an example. Kodak, one. It's not even just, Kodak is one of the more known examples. Oil rig company in Singapore wants to do an ICO for a new oil rig. A company that wants to basically, like I have this one very, very illustrative example. One of the billionaires in Singapore wants to pass legacy to his son. He has a lot of real estate, a lot of Ming Dynasty ceramic vase collections and stuff. Do you know how he wants to do it? He wants to ICO. You have a co-working space in Indonesia. They want to introduce fractional ownership through an ICO. So there is different models, but in two groups. One is I don't have anything, I want to ICO because I want to get rich, or maybe I have a great project. And big companies want to do an ICO for some small or not so small project that they have. It's not just startups. You have a company, I think it's called EBS Capital or something like that. This company specializes taking IPO'd companies in Singapore to ICO. So you have a company that specializes doing an ICO for public companies in Singapore. Maybe 10% are the more established companies, 90% is still people with ideas. So it's your startups. That's why I agreed with you. Most of it is still startups. Okay. So this part, there are two types of people. People who admit they just want to fundraise and people who don't. You can deal with people who want to admit that they want to fundraise. You don't want to deal with people who don't even want to admit that they just want to fundraise and get rich. Okay, so when I show the doom and gloom picture, here is a more bright picture. Literally, it's also brighter. Went to blockchain, right? So, yeah. By the way, I can send you afterwards if you want the presentation, but you're welcome to take the pictures as well. So, just 4 main things. There is more. This is not a comprehensive list, but just for you to understand, right? If going on blockchain is going to help you improve some part of your business, that's the rule of thumb. If it's going to help you, then by all means, go on blockchain. Remember, blockchain is just a technology. Or actually, let me correct myself. Blockchain went from being Bitcoin to being technology to being ultimately a decentralized action and thinking. So if your company, your product makes sense to be in ways that are decentralized, in terms, like if decentralized thinking or action is applied to your product and it's the next level, then that's the good heuristic for you to go to blockchain. If it improves any of this, or it lowers any of these other 3 points, then you go blockchain. You can use it because that's the tech that helps you do something better in your existing business or new business. Better than your competition, for example. And here, okay, I mean, this is meant to be sent and read offline, so you don't have to memorize. I can send it to you, or Carla and the team can send you afterwards. So some of the most successful blockchain projects have these things in common. I'm not going to go through this. It's basically what you would expect. Business as usual. You have good team, good backers. This is to show you that blockchain is still business as usual in some ways. Good investors, good team, successful track record of the founders. It's the same thing. And I give a lot of examples for each, right? Any questions on this? Yeah? That's right. That's right. But no, I don't think she meant or I meant gambling. The idea is like this: you are starting a business. No, it's a good point. You're starting a business. How do you fundraise? Like you said, the term ICO is misleading because people think IPO. Think of ICO as a Kickstarter for crypto companies. It's literally that. It's Kickstarter. Yeah, but because it's called initial coin offering for all the same reasons why white paper is called white paper, why bounty hunter is called bounty hunter. What do you do if you want to add credibility to a new field, new thing? You rip off, I'm going to go and say, rip off big terms, white paper, peer-reviewed scholar, long-form article. You want to take someone serious, you want someone to take you seriously, you call your paper white paper because that's when they take you seriously. I'm serious, that's one of the reasons. It's not called black paper, yellow paper, it's called white paper because that actually exists, that term. So you're saying which one of this is successful? I mean, like you said, a lot of those are new guys, right? Let's take NEO. NEO is the Ethereum of China. They want to be the Ethereum of China, more scalable. There's applications being built on top of that. If you ask me which one, you can have this kind of success criteria because you need a criteria for success. You can say which one is an application I use day to day, at least top 10. None of them. None. So if you go with that criteria, none of them is successful. Some of them are B2B, like Neo is a chain. It's like Windows operating system. You don't really see it, but it's there. But because it's not so popular in terms of applications on top of it, so it's not really mainstream. So if I go with a very rigid, stringent criteria, maybe none. If you I'll tell you one. Like EOS, they spent, I think, about a year, and raised more than $1 billion in their ICO, which is very interesting. These guys finally launched their mainnet, which is, let's say, the alpha version of their product, in June. I know some of the developers here, and they say applications that they are developing are already going into hundreds on top of this. It's still new, so you haven't seen. But as far as an operating system, so to speak, or chain is considered, if you put successful, I think EOS already you can consider it. It will take maybe another half year or 1 year before you see something on your phone that you use every day, in my view, right? But if you take that criteria, that daily usage, you hear about it, it's like eBay or something, it's still maybe a year away. But EOS is a good candidate for that. It's just early for me to say right now they are successful or not because they are still being built on top of. One example I'll give, maybe relatively known. How many of you know Steemit? Steemit. S-T-E-E-M-I-T. Steemit, what a lot of people don't know, is actually blockchain based. It's like medium.com. How many of you know Medium or WordPress? It's like Medium. A lot of people don't even know Steemit is on blockchain, but it is, and it's super used. A lot of people use it. That's the one that broke and became, I guess, more successful if we go with this criteria, right? So, but yeah, he has a point that it's still early to judge, but if you look at early signs, maybe a few of those are already. Steemit is, by the way, built on BitShares. It's the same founder. BitShares, EOS, and Steemit is the same Dan Larimer. You can check afterwards. So, yeah? Yeah. Okay, who wants to help me with a private blockchain? R3. Any other? Permissioned.
Is higher. Is that correct? Do you think?
Yeah, roughly. Think of this as more a corporate, so I can speak without a microphone. No, so think of it as more of an enterprise type of a chain. It's more, it's not for everyone to be. You have to be part of a company or a group or have an affiliation. Hyperledger is probably the most known example. IBM. So IBM is very good at two things, or so they say. AI. So you have IBM Watson and a suite of services. Well, they are good at cybersecurity as well, but blockchain is one of the things that IBM has been developing. Hyperledger is like 5 products, I think, if I recall correctly. All enterprise grade, private chains, used widely by a number of banks like Goldman Sachs. So yeah, there is already used widely. Why we don't know about it? Because it's B2B and there's a bunch of other things, non-blockchain, we don't know about. But it's being used very, very like, well. Okay, so, okay guys, yeah? Your question is? Okay, don't quote me on term latencies because I don't remember that by heart because that's not usually the most quoted one. It's the sheer throughput, which is transactions per second, right? But latency-wise, EOS, you know what, I can actually send you, maybe I have a presentation about the latencies. Like, I think comparing Bitcoin, Ethereum, and EOS. I think Ethereum and EOS at least, and then Bitcoin is there as well. I don't remember the numbers, to be very frank with you, but EOS is, I think, I forgot, it's in seconds, Bitcoin is in minutes sometimes. I'm not talking about even block production, but it's either minutes or seconds for most of them. There are some that are really like lower seconds, lower 1-digit seconds, but I don't remember. Huh? Oh. But yeah, EOS I think is a good example. And by the way, I have no interest or participation. I'm just objectively approaching them. Any other question? Yeah? Oh. Let's do this. Do you want to explain yourself? Or do you genuinely want to? But do you have your opinion about it? Okay. Who has an opinion what's a smart contract? A lot of you know, you're smiling. Do you want to explain? No? Anyone wants to say what's a smart contract? Keyword, there's word contract. Okay, I'll take it then. So there is 2 ways to answer this. Smart contract is a contract that executes specific things upon specific conditions, just like a normal contract. The difference between a paper contract and a smart contract is that paper contract stipulates points, but there is no execution or enforcement or whatever. It's a paper. Think of smart contract as, you can visualize it as pretty much the same thing, except if specific scopes and specific criteria are fulfilled, certain things happen. On-chain, off-chain. That's what's a smart contract. It's contract that can execute specific things based on specific criteria. That's what's a smart contract. The person who creates the contract. You can write, like Ethereum, okay, do you know why Ethereum became famous? Apart from its ICO, obviously. It's because of smart contracts. Because they provide you the technology, unlike Bitcoin, to actually write proper smart contracts. That's the reason why Ethereum became so popular among companies, big companies everywhere, because suddenly everyone woke up to the fact that they can write self-executing contracts. If A and B and C do ESD, and you can have as many parties as you want. Unlike many contracts, you cannot have more than 2 parties. Imagine a smart contract that has 3 different or 10 different parties, each has specific criteria, interdependency and stuff. You can code it. Smart contract, if you ask what that really is basically a program that has all these criteria codified in it. And it says if else, if then else, literally. If then else, if then else, and it executes. That's what it is. It's a piece of code, it's a piece of source code that does specific things. You code it. But business people, you want to explain, visualize a contract that can execute stuff. Any questions? No? Okay. Okay, I picked this because it's just, I think, very big, and everything that I'll say, pretty much everything, is universal to most of the industries. But how many of you are somehow in e-commerce or have been in e-commerce? Or know about e-commerce even? Yeah? Great, at least some of you. Great, so I didn't completely miss the point. Okay, anyone who doesn't agree with this? Top one? Anyone who does not think this is true? Like this one. This is like very simplified. The whole point is to illustrate how between buyer and seller there is 50 intermediaries, right? A very good example of blockchain is when you are disintermediating. So there's a lot of intermediaries, a lot of touch points, hence industries like e-commerce, logistics, supply chain, even health in some ways, all benefit from blockchain because between two parties of trying to transact, there is 50 middlemen, intermediaries, etc. This kind of a case, great case for blockchain. Yeah? How would it eliminate what? No, eliminate because you think paid advertising is a problem, because blockchain is supposed to help improve efficiency or eliminate a problem. Paid advertising? Okay, fair point. Paid advertising, who is benefiting from it? Let's say Google. Huh? The publisher, great. So there is companies, I actually know one. What they do is basically, it's called Unboxed. What they do is basically they want everyone to be an advertiser of their own services and executioner of their own things. So it's an influencer, they call it an influencer marketing on blockchain. I think that's roughly how they describe themselves. But because companies like Google or Facebook, etc., poach most of this, if you're a small company, you are unable to actually do proper advertising and stand in front of a lot of audience, right? So disintermediating and leveling the field is usually what blockchain does for this kind of a case. If you want, let's say, paid advertising to have both, let's say, Google and an SME on an equal ground, you can use blockchain. I, as an SME, can stake some tokens, as an example, or I can use blockchain in a way to advertise just like Google, and I don't have to be a publisher, I don't have to go through Google. Because now, if I want to do paid advertising, guys, where do I go? I go to Google, right? If I want to do it myself, can I do it? I can't. I don't have the platform. There are companies already doing exactly what you're saying. They are providing advertising or marketing possibility on blockchain. You as an SME or a startup can go in, have the same tools, just like any other, like Google. And the best part is you don't pay them. Not only you don't have to go and talk to them, you don't even have to pay anyone. It's up to you. So there is a number of platforms already, like Unboxed, that do that. No, as in, you don't go through the big gatekeeping company like Google. You can do yourself. That platform provides you the tools to advertise your own stuff. The traffic is based on the platform. Like there's users, community, etc. You bring that. I'm just saying that they provide the tools. Up to you still to get the community excited about your project. But the fact is, before you could not do it, because you have to talk to Google, pay them a lot, and then something doesn't work or they don't approve, you are gone. Here, blockchain, what they do is they say, don't talk to Google. I give you the same tools to do paid advertising campaign, but again, because they don't necessarily have millions of users, it's still not that popular. So your point is, yes, I mean, I agree, but it's coming. You don't agree? It's okay. Say. No, it's okay. Okay, sounds good. We can talk about it after if you want. So basically the whole point is, and one thing I forgot, right? It's even here, it's a smart contract. Seller and buyer have specific conditions, right? Seller wants good quality, specific price. Buyer also has specific conditions. How do you ensure that all the conditions on both sides are fulfilled? You have so many intermediaries, no one goes and checks what's on a paper, right? So with smart contracts, you can really solve that. Because if you have a smart contract that supervises A to B transaction, that can, like, I'll give you an example. I think I gave this example before. Anyone knows what's cloud gaming? Cloud gaming, okay. Cloud gaming is, think of it this way. When you want to play a really good game with high resolution, you need a special computer, right? Because not everyone has it, you can just have a normal laptop, connect to some server, which has the special graphic processing unit or whatever, and play a very good game. Now, this company in Australia, they saw that, I think you were asking about latency, right? They saw that there are a number of their users who are next to each other in Australia. Some of them have very good computers, some of them don't, but everyone connects to American server to play the game. So it's very slow because you connect from Australia to America, you have to wait some seconds, it's not nice. These guys thought, if we put this on blockchain, we realize that we have like clusters of people who both need and have this kind of graphic processing unit. So I am connecting to my neighbor 2 kilometers away instead of connecting thousands of kilometers away. It solves my latency problem. It solves also, there is a bit of social factor that you can meet each other, etc. But the big issue was latency. Guys, latency problem was solved because these guys decided to put it on blockchain. Instead of you having a centralized server in US, you connect to each other. Smart contract put criteria, quality, I think there was quality and there was latency and a few other things, and price. If all are met, you get paid. You have a spare GPU, I use it. I don't have to go to the server. Everyone wins. You win because you give your GPU, you earn something. I win because I have a good experience and I pay you. Company wins because more people come. It becomes like a self-reinforcing sort of a positive loop, right? So this is a good example of how, for example, blockchain can take your product to the next level. So any place where there is centralization and it's not making it efficient, you can decentralize, you can, and you should. And smart contracts are there to execute all these criteria based on which your transaction or whatever that you have is happening. Right? Okay, maybe, I mean, that was just a title for it. So, very quickly, increasing transparency. A lot of this is, by the way, okay, e-commerce product, this could be some logistic product. Okay, so a lot of this is very universal. So, increasing transparency, cost efficiency, very important, guys, cost efficiency. Effective integration. So all of this are possibilities, mostly universal. Just replace word e-commerce with whatever the industry you are relevant to. So as I said, a lot of this is also relevant to other industries, right? And of course, like if it's a supply chain related industry, with hands down, you can probably do something on blockchain. If there is shipping or delivery, if there's customer relationship management, all of these different aspects, even if your company is not a CRM or customer relationship management company, if it has a component, that part could be potentially considered for blockchain innovation or something. Yeah? Okay. So I'm advising, it's very interesting. We didn't agree, by the way, him and I, but I actually advise a company that is doing, so chemical logistics, ISO tanks. ISO tank is this big metallic tube-like. Everyone knows what's an ISO tank? I won't be surprised if you don't know. It's this big tank where you are transferring chemicals, mostly chemical liquids. So ISO tank, and you don't have to know the detail, but the idea is that you manufacture the tank itself, then you go to customs, you go to logistics provider, then you go to customs, then you ship. The other side, you have another provider, then the customs, then you ship to intermediary who ships to the end. There is basically a lot of touch points. This company, the execs of that company decided to leave their very comfortable big jobs and start basically a blockchain company about the same thing. They provide a technology whereby, in this case, you're not disintermediating, you're increasing efficiency. Where is that slide? Oh. You're increasing transparency and efficiency by putting all these different touch points. So suddenly you have the manufacturer of the tank, the logistics provider, because all of them have to share information with each other. This is super inefficient. Everyone has their siloed info. It's all paper. It's not stored. Things get lost. Things get not done properly. These guys thought, why don't we put everyone on the same blockchain? Everyone can share information with specific access credentials. Everyone benefits. I don't have to go show a paper to someone, then make sure that he has the right paper, and the other paper, I don't know where it is. So think of it this way. When there's multiple touch points, putting all of them, especially if they have to share information or pass or add or create information, putting them on blockchain is a very good idea. No, yeah, they are going to use Ethereum as a beginning as well. A lot of the companies want to try and pilot on Ethereum because that's the one that all the investors also buy, and that's the one that everyone knows about. But yeah, they are doing Ethereum, and then they're going to go private. Yeah? That's right. Correct. So it's a very, very good and actually really valid. That's actually the one question we ask as well. There is an incentive system for every one of these touch points to actually cooperate and participate. There's token system designed around it. Tokens are awarded for specific desired behavior for each of those. For customs office, it's apparently checking and doing few other things. Then you get specific number of tokens, it's stored, and it can increase in value. For ISO tank manufacturing company, these are another set of incentives which are relevant for them. So guys, it's a very relevant point. How do you, and this is the bread and butter what we do at Prism, right? This is the economics or incentive systems in economics. When you have multiple people dealing with each other with conflicting interests, how do you make everyone incentivized to deal with each other in a way that not only we all win, but the overall ecosystem wins as well? This is the big elephant in the room. And it's very difficult, and that's why a lot of companies don't have it right, because they don't even realize it. So he asked a very, very valid question. Please. Okay. Yeah. Yeah. That's right. That's right. Yeah, that's right. That's exactly the conflicting interest kind of a case. But then you have to design around in a way that they both still work with each other. Because if I put here my price and I put, if the, let's say, discrepancy or the difference of prices is so much, it's not going to work for any of them. It's a bit, if you think of it, is a bit like prisoner's dilemma. You have to make everyone, I mean, prisoner's dilemma doesn't have the greatest win-win solution, but it's a similar sort of analogy. You have to incentivize them to come to the middle. Because if seller does this, buyer does this, nothing is going to happen. So how do you incentivize them to go below this one and above this one? I mean, that's what we do, right? We advise on this. How do you incentivize parties with conflicts of interest? Okay. Trust. Guys, who knows what's trust? Philip, do you know what's trust? Can you help me with what's trust? Yeah, I trust you, but how to explain trust? Anyone can help me explain trust?
So, fish in the ocean, for example, in the US today, I was reading the other day that 50% of all of the snapper, that's a kind of fish, sold in the US, that sits on people's plates, is actually not snapper. 50%. It's not. Okay, and that's because of the, they catch it in the sea, they often process it in the sea. There are many parts of the system where people can swap it out. Okay, and roughly 33% of all of the fish that's sold in the US is not what it says it is. It's something lesser.
Okay. Yeah, okay, so the reason I ask for one of you guys to help me is because trust is like quality or like time. It's very difficult to explain unless there is an example like this one. Okay, so let's put this way. Trust, if you see, for example, not Google, what's a good example? Let's say, like, how many of you are Singaporeans? Okay, some of you are Singaporeans, right? So when you see Singapore government say something, you trust that government, right? Trust comes with, for example, authority, right? It's the same for Brazil, right? You trust, let's say, not, I don't know if you trust your president or you don't trust, but point is, it's not a good example, yeah. Oh, Yeah, so trust for money, I mean, this is a bit digressing, but people use money because they know that other people. So money is the best trust system, by the way, in the world, better than any religion. People trust money because everyone else trusts money. You trust it for its own sake because everyone else trusts it. It's a self-reinforcing thing. But your example, authority could be one thing, or validation, put it this way, not even authority. Validation is what instills trust. If you know that you want something and that something comes from a source that you have faith in or you trust, right? So validated authority. For example, in case of snapper fish, you want basically a validation that this is actually snapper, not some whatever cheap fish, right? So I think maybe if I break your question down, just one moment. That would be basically to validate, and you can have the nodes or you can have authorities on blockchain, different type of people, experts or oracles or whatever you want to call them, to validate. If you ask me how to validate, it becomes a very project-specific question. But validation, or if you see on Facebook or Twitter the check validation, you trust this is the real Donald Trump, right? This is not some fake Donald Trump. He even says it real Donald Trump, right? So, wait, here the, oh, S. Correct. I mean, trust you can define, I think, in a number of ways. I mean, that's one of them, right? It's something you can depend on, rely on, you know of, the source of which you think is right or correct. There's a lot of adjectives I can put. That's why it's difficult to actually have one definition.
The question is, in the case of the fish, right? You know that you do have a government that should regulate. You do have investigative journalism, which is how you got it, and you do have that 1 in 100 people in this community will be the person that is geeky enough to go and investigate that. Now, when you take that into this concept of a community, you do rely strictly on the community and its part to self-regulate. Is that?
So there is a concept of oracles in blockchain. How many of you know this concept? Oracle. I mean, it's not a random term. There is also a reason why oracle is there. Anyone knows oracle? Okay, let's simply say experts. There is a system called experts. On a lot of the blockchain platforms, you have some sort of experts. Some of them are called oracles. Some of them are just called experts or whatever. Idea is this is the authority or someone who knows, someone you can trust. So another point to the gentleman's question is expertise. You trust in experts, right? So validation of a fish can happen if one of the community goes literally checks. He is incentivized, he gets something, some token or some other incentive. He goes actually checks, is it right or no? Is it actually a snapper? He eyeballs it, he takes a picture, he says, I validate, it is. You trust him because before he became an expert, he got validated or promoted or somehow checked as an expert. Community can sell, yeah.
So let me make it a real issue. So I'm involved in sustainable coffee, specialty coffee. And as much as we can put it up on our blockchain and drive supply chain efficiency and transparency and traceability. Imagine like a 10-kilogram bag running through the entire system. But what if someone at some point in the process swapped out the bag, put in other coffee? So all of the logic of you running the business today has to apply equally on a blockchain. The blockchain's only like a digital system that's enabling it. So what we're looking at trying to do is the original 10-kilogram bag has a special, like a grain-fed green bag inside of it that allows moisture to go in. We're going to QR code that. And then on the outside of it, there's going to be a Hessian bag. And it's going to be designed so it's once we seal it, it's sealed. Both the bag inside and outside will have a QR code, and that will be the traceability all through the system. So is it perfect? No, but you'll need those kind of systems in place. Which is reality.
This is like, and we have to go faster, guys, but this is one of the most important things. There has to be a possibility to verify the physical, not online. Some cases it is, some cases it's not. Guys, we have to go faster. We're a bit short on time. If you have questions, if they can wait, let it wait, and you can ask me offline. So this, we sort of talked. I'll just go through 2-3 points. Again, you can take a picture or we'll send you this. So some of the myths, let me take one that I sort of didn't touch yet. Yeah, this one, number 4, I touched. Will be cheaper, blockchain-based can be hacked. Yeah, well, this one, probably a lot of you heard, there are a lot of hacking examples on media. Because a lot of this is quoted as an advantage of blockchain, it's not true at all. That's why I put it here as a myth. Yeah, this is very also, especially in places where it is still relatively new, like Brazil, people think blockchain is either Bitcoin or fintech. That's what, I don't know, I think that's what they still think there. And it's not true. It's actually, like, that was the step 1. Now there's 2, 3, and places like Singapore is step 4. It's like everything is going on blockchain. Everything from banking to supply chain to health to education. Trends and vision, again, just very quickly on this part. So there was a question about smart contracts. So there is huge usage of smart contracts already happening, both in retail type of blockchain projects and B2B. Just because, again, think of it. You put in contract 10 different parties, each with different conditions. It's impossible to physically execute. All it's on paper. You can't really check validity of specific claims. Contract can ensure everything is checked, done, and automatically executed on all parts. Increasing regulation. Okay, for Brazilian audience here. Did you know that there is a project that's trying to come up with crypto real? Did you know that your real is going into blockchain? Did you? Okay, I'll show you an example afterwards. I'll show you the link. Yeah, there is already. Security tokens. Who knows what's a security token? Who knows what's a token, guys? Who knows what's a token? Okay, I don't have time to go a lot into what's a token, but security token basically is a representation of a digital, representation of a real asset on blockchain. Everything from building to the chair to shares to profit. Everything that's real represented on generally it's a security, and that security token is basically the representation of your security on blockchain. So now security tokens are becoming very, very popular. Everyone wants to blockchainize, so to speak, the real estate, the vases, the whatever. Yeah, you had a quick question? In the health industry. Okay, I have a good example. A company called Deep Radiology. So Deep Radiology is an American company. You can Google it, Deep Radiology. They use AI and blockchain. They basically have MRI, CT scans, etc. They realize that it's very inefficient and it takes a lot of time, costs a lot of money to actually scan manually, then post it back or send the result to the patient. So they deployed AI since 2012, and since last year they're using blockchain to decrease the operational expenses. It's a very good example of how in health, operational or admin expenses can be very impactfully decreased using blockchain. Now you can read about that project. It's a very nice project. No worries. Disruption of industries such as supply chain, logistics, health. This is like the next level. Everything is being disrupted. Every industry you think of. I don't know, for example, a case on book publishing industry, but probably short of that on 1 or 2. Everything else you can think of is being disrupted. There is this statistic. In 3 years' time, 25% of global 2000, I think some of you represent maybe that, are going to be using blockchain as a foundation for their digital strategy and digital products, yeah? No, so how would... No, so smart contract, the definition I gave is universal. Now, for your industry, what industry are you in? Financial. For example, in financial, it can be specific financial type of transactions around that. For example, it can say, because it's a transaction, so it usually has more than one side, right? It can say if A, B, and C for this case, receiving side. Huh? Yes, you can split, you can time, you can put conditions. That's the beauty. It's very versatile. You can do a number of things. You can specify the kind of transaction and the conditions around multi-party transactions in your case, and you code it and you run it, and that's it. It executes based on that automatically. No. Smart, by the way, it's called smart because once you design or code it in a way that is what you want, it's going to do it by itself. I think it's not smart because it has any, let's say, intelligence of its own or AI. It's not. It's not. It's just smart because we perceive it as smart. It does what it's supposed to do. It's like saying computer is smart. Yeah? Okay. Maybe I'll just go through one or two of this, and I'll show you the Brazilian slide, and that would be the end of it, guys. So some of the top blockchain firms in 2018, according to Forbes. If you ask me about success criteria, these are relatively new projects. Not sure you can qualify it as success like, I don't know, Amazon, but they are successful in their own right. There is banking on blockchain. There is decentralized influencer marketing. Yeah, that's another case the gentleman was were asking also. There is gaming marketplaces, number of them that I also know. Media planning and buying, here. He's not looking. You can check this. Adbit, it's a token. Check that. That's also media buying and planning on blockchain. Like this is like Dropbox. Very interesting. And Fcoin is a decentralized exchange. You had a question about SGX trying to do an exchange. So, and then, who recognizes this flag? Okay, so very quickly, my research is not extensive, just few tidbits. All of these are clickable, you can click and see, okay? So, BCB is Banco Central do Brasil. It's your central bank. They developed, they are not developing, they developed a data exchange platform in order to allow secure data sharing between financial regulators in Brazil. It's already done, it's being used. Operação Lava Jato, this is the famous anti-corruption campaign led by your previous president. I think, I don't know, he started or the one before started? He started. He is in jail now. Judge started. Did you know that the petition to free him is on blockchain as well? The platform that's petitioning to release him from jail is on blockchain. I'm serious. Yeah, okay. You're talking about trust, yeah? So all of these are clickable. There is GovTech initiatives, FinTech, national cryptocurrency. This is your crypto real. Fight corruption and other projects. This one has like a bunch of projects, Brazilian projects listed. You can afterwards click and see. But basically, there is a lot of stuff in Brazil that's happening already on blockchain. There is associations. Government is developing crypto national currency. Yeah? The design of the system is usually done that to get corrupt is very, very, very difficult and costly. Most of the blockchains make it very difficult. Okay, corrupt, technologically corrupt. If you say business meeting, nothing prevents. But it's also still, I think, just logistically difficult. But generally, in theory, nothing prevents. Yeah. Okay, the final slide, guys. Sorry to hold you up a lot. Reimagine your product and service aspects related to privacy, etc. in terms of blockchain. Just think blockchain is decentralized action and thinking. If you can make your product decentralized in terms of action and thinking, then you have a very good shot of doing blockchain. Build a strong business case for blockchain usage. Don't just say it's blockchain. We get like a lending company says, well, we're in blockchain, so it's great. It's not. You have a lot of transaction, it's not scalable. You don't even measure up to any of your non-blockchain competitors. Why are you doing it on blockchain? The guy said, because it's blockchain. Okay, well, dismissed, didn't invest. Conduct an industry and competitor analysis to make sure you are very strong both on blockchain and non-blockchain competitor side. Conduct tests to compare how your blockchain version of a product and not normal version perform. Because you want ideally better performance, right? Blockchain or no. And consider adding AI, etc., etc. AI because, guys, blockchain has a lot of data. AI needs and works with a lot of data. That's why there is a bit of convergence of AI and blockchain in a number of cases, because one produces and stores data, the other processes and uses data. So if you have a lot of data, what do you do with it? You want insights? How do you get a lot of insights? You can deploy some machine learning or AI algorithms for some of your products, I guess, at least. And that's it. I love this quote. He who thinks he can and he who thinks he cannot are both right. Think about it. This is an ancient Chinese wisdom. And yeah, happy to contact with you if you want. Thanks everyone.
Thank you, Hayk. Thank you so much. I don't know about you guys, but what I see the power of your talk was to poke holes in our brain and make us go forward looking to what we need to know more about blockchain. So thank you so much. We are going to just invite you all to take the next 10 minutes to mingle and meet Brazilians and non-Brazilians and take this opportunity to exchange a little bit more of knowledge. So. Hello.
Hello,
Hi.
Melissa.
Nice to meet you, Valentine.
Hello,
I was
Melody.
impressed with the quality of your question.